Hello everyone, my name is Gopal Shaha. Today I am going to give you an overview of how national account estimates like gross value added, gross fixed capital formation, etc. are prepared for non-financial, non-departmental enterprises. But before moving ahead, a disclaimer. This presentation is given for educational use only. Information in this presentation is in summary form and does not purport to be complete. Before straightway going to discuss the compilation of national account estimates of non-financial, non-departmental enterprises, let's have a look of total economy and where in total economy our non-financial NDs stand. According to System of National Account, total economy is defined as the entire set of resident institutional units. The resident institutional units that make up the total economy are grouped into 5 mutually exclusive institutional sectors. These are general government, financial corporation, non-financial corporation, NPs and households. The financial corporation consists of all resident corporation or quasi corporations principally engaged in financial intermediation or in auxiliary financial activities, which are closely related to financial intermediation. Whereas non-financial corporations are entities whose principal activity is to produce market goods or to provide non-financial services. In India, estimates for non-financial corporations are prepared separately for public corporation and private corporations. Public non-financial corporations are further classified as departmental enterprise and non-departmental enterprises. Departmental enterprises are unincorporated enterprises controlled and run directly by government. The salient features of those enterprises are they do not have independent financial assets and liabilities. The non-departmental enterprises are comprised of government or public enterprises in which not less than 51% of paid up capital or in short PUC held by central government or state government or partly by central government and partly by one or more state government. These enterprises have independent financial assets and liabilities, and therefore it has its own balance sheet and profit and loss account. In this presentation, we will only discuss about the non-financial, non-departmental enterprises. Now, after having a clear idea about the positioning of NDs in total economy, now we are looking to the share of GVA of non-departmental enterprises in the GVA of total economy over different years. We can see that from 2011-12 to 18-19, the share of non-financial, non-departmental enterprises remains in the range of 4% to 6%, where it was around 5.7%, that is in its peak in 2011-12. At present, it comes down to 4.3%. However, if we go to the industry-wise share, then we can find some industry group like mining and quarrying, electricity, gas and water supply, where the contribution of these NDs is more than 50%. This slide, we classify the non-departmental enterprises. Like non-departmental enterprises consist of companies registered with Ministry of Corporate Affairs under Companies Act 2013 2013, like ONGC or IOCL, as well as NDs consist of statutory corporations set up under special enactment of Parliament or state legislatures, like Food Corporation of India, Kerala State Electricity Board, etc. NDs are further classified as central ND or state ND according to their ownership, that is, whether they are owned by state government or central government. Availability of a complete and up-to-date frame of all the eligible units is an essential prerequisite. Therefore, as a first step, frame of a active NDs is prepared in National Accounts Division. Preparation of frame comprises of a few steps, like first collecting the prerequisite details from the respective regulatory authorities, then identifying the major activity of the enterprises, like whether it is a financial enterprise or non-financial enterprise, and then preparing further details for each ND unit to make a uniform structure as given in this slide for the frame of non-financial NDs. The main data items available in the frame of non-financial NDs are first NAD code. It is the unique code given by the ND unit of National Accounts Division for internal use. Then SIN or corporate identification number, which is allotted by MCA to each ND which is registered with the Ministry of Corporate Affairs under Companies Act. Then economic activity or industry description. This gives the idea of broad economic activity of each enterprise. Then we maintain the information regarding the type of registration of the ND, like if the ND has been established under some specific act of the central government or state government, it is marked as statutory ND, and if the ND is registered with the Companies Act 2013, then it is referred in the frame as government. Then ownership detail of the ND, that is whether the ND is under central government or state government. We also maintain the details related to state in which the enterprise is presently operating. This particular information is useful for preparing state or union territory wise national account estimates. The field NIC maintains the detail of compilation category based on the activity of the enterprise. Now, as per the latest updated frame, there are approximately 1900 NDs presently operating in our country, out of which around 400 are center NDs and approximately 1500 NDs are under different state government. The frame is being revised or updated regularly by adding newly formed NDs and deleting the closed or merged or non-functional units. Usually the Ministry of Public Enterprise and Heavy Industry conduct an annual survey of all the central NDs. The list of central NDs is used to add enterprises in the frame. Further, lists are also obtained from respective state government or state AG offices. Letters are sent to AG offices located to different states as they conduct statutory audit of all the public sector enterprises. The NAD sends the list of enterprises maintained in the frame, and the AG offices are requested to provide details of additional enterprises. Deletion from the list of NDs can happen due to two reasons. First, if the ND stops operation, or if the ownership changes from majority government to majority non-government. The information on shareholding pattern of the NDs is checked from the latest annual reports uh, to decide on ownership position. If an ND is a company, then the latest status is verified from the MCA website before deleting it from the frame. Now, after preparing the frame, the major challenges that we are facing is to identify the primary activity that the ND is presently carrying out. As ND estimates are prepared industry-wise, class identification of primary activity of a unit is very important to classify particular ND under correct industry group. To do so, we thoroughly check the details provided in annual report of that enterprise or in MGT 7 or MGT 9 form of the enterprise, website of that particular enterprise, or information available in SIN. As we know that in the 21 digit corporate identification number, the letter from second position to sixth position depicts the NIC 2004 code. Only after checking all the available information, ND is allotted an industry and added in the frame. Further, frame is also shared with the state DES, and if any information is received from the DES, the frame is updated accordingly. Now coming to the data source for non-financial departmental enterprises. By law, the statutory corporations and registered public companies are required to present the annual profit and loss and balance sheet summary to their shareholders. These annual reports of individual units which contain profit and loss or in short PL and balance sheet statement along with their accompanying notes or schedules are used for preparing the NS estimates of non-finance NDs. The profit and loss account gives the detail of income and expenditure incurred by the enterprise during the accounting year. Companies are expected to keep their P&L statement in certain formats. Typically, the profit and loss statement will show first the revenue received by a company, then the cost or expenses involved in generating that revenue, and finally appropriation, which provides details of taxation, dividend distribution, and profit after tax. Similar to that, the balance sheet provides the details of economic position of a unit at a point of time in comparison to the previous year. Balance sheet includes asset on one side and liabilities on the other side. For the balance sheet to reflect the true picture, both heads of liabilities and assets should tally. That means asset should be equals to liabilities plus equity. Besides the annual reports of each entities, to maximize the coverage, company-wise data received from Ministry of Corporate Affairs for those companies which have filed their annual returns in XBRL and AOC4 format are used for analysis purpose. But those particular data in XBRL and AOC formats are only used after proper validation. Now, if we are talking about the approach for measuring GVA and other national account estimates from business account of non-financial, non-departmental enterprises, then we here using production approach and compute estimate of each enterprise. Like for GVA, we are using the formula output minus intermediate consumption. The annual account of NDE is main source of data for drawing up the national accounts. However, it is not necessarily satisfying the valuation requirement of the SNA, and therefore accordingly mapping may have to be done. For example, holding gain and losses are not considered to form part of income in SNA, but business accounting standards treats holding gain and losses as income, although SNA excludes holding gain and losses from production. Thus, all the entries of profit and loss account and balance sheet required to be reclassified for determining the national account aggregates. Therefore, while analyzing the report, a relationship is built between profit and loss account and balance sheet variable of NDs with national account variables. After discussing the mapping of annual report items to SNA items, let us first note the broad similarities between the two main components of annual financial statements and the different accounts of sequence of accounts. In the AFS, the profit and loss provides the flow data showing total business receipts and expenses in a financial year by an enterprise. In SOA, the first few accounts, that is from production account to secondary distribution of income account, also depicts the flow data. Then in AFS, the balance sheet summary shows the stock data, provides assets and liabilities of the enterprise at the beginning of a financial year, also shows asset wise additions, deletions, adjustments or revaluation, then depreciation during the year, also, and then finally the closing stock value of the asset and liabilities. In the SOA, the capital account shows the details with respect to the man-made assets, inventories, natural assets, intangible assets, etc., followed by change in financial assets. Then it records some other changes like holding gain, changes due to natural calamities, etc. Then arrives at the closing stock figure for the entire economy. However, in India, the components of the SOA are prepared up to the financial accounts. A second broad area of similarities between the receipts and expenses items of the AFS with the resource and use items in the SOA is in both the cases the flows have two sides. Like in AFS we have receipts and expenses, and similar to that in SOA we have resources and uses. It is therefore possible to map the item of receipts with the item of resources and the item of expenses with the item of uses. At the first stage, this mapping is necessary to ensure that the net additions generated by the NFC get reflected in a consistent manner in the flow of account of the SOA. In the coming two slide, the mapping is shown using a numerical example, and profit and loss account items along with related schedule of a company are mapped with the national account variable. Although detailed items are usually given in schedule or notes but for example purpose, detailed items are wrote down below the main items. Like all items under the other income are written below instead of referring to notes or schedules. In SNA, output is defined as the value of goods and services produced by an establishment. This excludes the value of any goods and services used in an activity for which the establishment does not assume the risk of using that product in production. And also, it excludes the value of goods and services consumed by the same establishment except for the goods and services used for capital formation or own final consumption. Thus, in this particular example, sale of products, other operating revenue, then miscellaneous income, purchase of stock in trade, and changes in inventories are mapped with national account variable output. Here, it may be noted that the purchase of stock in trade is deducted from output, although it is an item of expense. Here, the mapping is in between one item of expense of the AFS with an item of resource in the SOA. Note that this mapping is with a negative sign, thereby ensuring the balance between the AFS and the SOA. This is actually done to ensure that there is no double counting of any items produced in the economy, and only the trade margin gets reflected in the output. Further, the interest received shown under other income is mapped with property income interest received, as SNA defines the property income as the sum of investment income and rent, where investment income is the income receivable by the owner of a financial asset in return for providing funds to another institutional unit. Following the similar definition, almost all the items except other borrowing cost under finance cost on expenditure side are mapped with SNA variable property income interest paid, and other borrowing cost is mapped with intermediate consumption. The other expenditure side items are mapped with intermediate consumption, compensation to employee, and depreciation book value. While analyzing the annual report, each item of profit and loss account and balance sheet is mapped with some national account variables as per the information about the nature of the item available in the annual report of that particular enterprise. For the more detailed understanding and concepts related to SNA items or national account variables and what item comes under this variable, one can refer to System of National Accounts 2008. Finally, after mapping, defined NAS estimates generated by adding the profit and loss item corresponding to it in the mapping. As shown in the previous two slides, how the mapping is done between the AFS item with the SNA item, now we are going to compile some of the national account estimates. Like output is compiled as the sum of all the entries corresponding to output description. That means in our example, output is the sum of sale of products, other operating revenue, miscellaneous income, then purchase of stock in trade, and changes in inventories. And thus the output of the enterprise will come out by summing all these particular entities, and the final output figure of that particular enterprise is 12,227. Similarly, IC is compiled as the sum of all entries corresponding to IC description. These are the entries, and after deriving both output and intermediate consumption, the GVA is compiled using production approach, that is output minus IC. In our case, the GVA of that particular enterprise is coming out to be 9,397. Now, other national accounts aggregates like compensation to employee, then depreciation book value, then taxes on production, subsidy on production, property income, both interest received and paid, then income tax, then other current transfers received and paid. All these SNA estimates can be compiled in the same using the same procedure as explained while comparing the output. In this example, the value of depreciation as provided by NDE in its business account is different from consumption of fixed capital. CFC values for complete non-financial NDE sector is compiled and provided by the CFC unit of NAD. Now, this slides explains the computation of gross fixed capital formation through different numerical example. As SNA, as per SNA, gross fixed capital formation is measured by the total value of a producer's acquisition less disposal of fixed asset during the accounting period plus certain specified expenditure on services that adds to the value of non-produced assets. GFCF are compiled mainly using balance sheet values on tangible assets, intangible assets, capital work in progress, and intangible assets under development. There is a detailed process for computing GVA, but for understanding purpose, the method is presented here through only note on non-current tangible asset of balance sheet. Slide shows format of non-current tangible asset of the balance sheet summary table. Here, GFCF is compiled from this particular note as addition during the year, less deduction or adjustment during the year in gross block, plus deduction or adjustment in the depreciation. For all the items except land, as it is a non-produced asset, the GFCF is compiled. Okay, using the above mentioned formula, the item wise GFCF values are compiled. Like if you go through the table, you can find in the 6th column we compile the item wise GFCF for building, plant and equipments, then furniture and fixtures, etc. Following the similar process, item-wise GFCF can be compiled for intangible assets also. However, here we have only taken the tangible assets for example. Therefore, for this item-wise GFCF, total GFCF is compiled after allocating the change in the capital work in progress to the relevant item. In our example, the change in the capital work in progress is 6,162.49. So this particular value has to be reallocated. Okay, now as this particular change in capital asset is given under construction, So this particular 6162.49 value will be allocated in the field against building. So after allocating the CWP, the final GFCF is compiled. So for this particular enterprise against tangible asset, the total GFCF will be 20,463.64. It is also again reiterated that there is a detailed procedure for computing GFCF, and for understanding purpose, a brief snapshot is provided here. These NS estimates are generated for each individual enterprises, and ND estimates for each industry like manufacturing or mining, etc., is prepared by adding the NS estimates of each enterprise of that particular industry. As already discussed, the industry wise or NIC wise ND's information is maintained in our frame. Now in this slide we'll have a few profit and loss account items, and their mapping will also be discussed. So if we have a item to that is related to purchase of stock in trade, then it will be deducted from the output, as already discussed in our numerical example section. Then the treatment of some items may differ depending on the industry where the item is occurring. For example, for any enterprise, electricity expenses is usually considered as intermediate consumption, but for electricity generation companies, the same will be considered as output, and negative output, and it will be deducted from output. Due care should be taken while mapping the items like rent and rental. In the SNA, rent are the payments made for the use of non-financial, non-produced assets like land land, and they are classified as property income. Rentals, on the other hand, are payments for the use of produced assets owned by other institutional units, and are treated as intermediate consumption for the unit who is paying the rent. For example, like rental of buildings or cars, etc. Enterprise sometimes use description rent for rent paid on building or other fixed assets in their annual accounts. Therefore, while mapping such items, detailed notes of the annual report should be referred to ascertain the treatment of those items, whether it will be treated as IC or property income. Similar to that, due care should be taken while mapping some items related to tax on production and tax on product. Tax on product is a tax that is payable per unit of some goods or services. The example are like excise duty, whereas tax on production consists of all the taxes an enterprise is incurring as a result of engaging in the production, like stamp duty. The main constraints while preparing the estimates of NDs is delay in recipient of the annual reports. Most of the Center ND's annual report are received or available on their website before the first revised estimates are released. However, report of state NDs are received with some time lag. Some reports are received with the time lag of even 2 to 3 years. The second constraint is classification of industry. Although due care is taken in classifying a particular ND to a particular industry, but some item information sometime information about the economic activity under which ND is working is not available, or unit engaged in economic activity is defined from as it reflects from its corporate identification number, that is seen. Beside this particular misclassification of industry issue, we are also facing another issue regarding the frame updation. ND frame is being updated regularly. However, information on closure or merger of an existing ND or newly created ND is not received on time. So, with this, I would like to end the presentation. Hope you get some insight about how we compile the national account estimates of non-financial, non-departmental enterprises. Thank you for your kind attention.